We're Sencha Health. We are in the business of streamlining and automating processes, and we have even automated the production of new software. Usually we talk about the state of healthcare and health insurance in the United States, and today is no different. Today we are going to discuss how big health insurance uses internal eliminations to circumvent medical loss ratio laws and defraud the government and you, the taxpayer. I will be back after the presentation to discuss our conclusions and what this all means to you.
Internal eliminations are what your insurance company uses to defraud the American taxpayer by circumventing the Affordable Care Act's ACA Medical Loss Ratio mandate. Medical Loss Ratio, MLR, is the proportion of benefits returned to the consumer as a proportion of his or her premiums collectively. The ACA mandates that for its policies, the insurance company must return 80 to 85% of the premiums as benefits. For example, if United Healthcare charges you $100 per month, they must return on average $85 for your medical care. Internal eliminations is the accounting trick of moving profit from one wholly owned subsidiary to another to avoid running afoul of this mandate. Using real numbers, if United Healthcare charges you $100 per month as a premium and returns $46.14 as benefits, they can internally eliminate $38.86 of profit by transferring it to its wholly owned subsidiary, Optum, only show $15 profit on their books, and still be in compliance with the ACA's MLR law, while actually making $53.86 profit from every $100 you send them. That is a lot more than 15%. United Health Group, UHG, is the conglomeration of United Healthcare, the insurance company, and Optum, the health services company. We obtained a copy of the Data Elements 2025 Outlook that shows their estimates for revenue and profits for 2025. We obtained these from our LinkedIn friends, Chris Deacon and Joshua Brooker, who wrote on this subject. We are including screenshots of it here. On your screen is a copy of the top third of the first page of this Data Elements 2025 Outlook we mentioned earlier. United Healthcare, UHC, is estimating $337 billion to $340 billion in revenue. The next line down, labeled Eliminations, is this transfer we talked about previously, for $164 billion to $165 billion. Finally, operating earnings are stated as $17.5 billion to $18 billion. For simplicity, let's take the worst-case scenario, the one that makes UHC look the best. Let's calculate the profit margin so we can compare it to the ACA mandated 15% medical loss ratio. The stated internal elimination of $164 billion plus the stated operating earnings of $17.5 billion combined give us a $181.5 billion operating profit. The profit margin is defined as profit divided by revenue and therefore would be as shown on your screen. This means that the effective profit margin is 53.86%, or that they keep $53.86 of every $100 you give them. We all know, or just learned, that a company the size of UHC is bound by law to return 85% of the premiums paid as benefits. We have just proven, with their own documentation, that they are keeping 53.86% of every dollar that is entrusted to them, or a whopping 38.86% extra that they legally are not entitled to. We also know that all insurance companies work the same way, or they would put UHC out of business because nobody would buy their product if it were that much more expensive due to the massive profit margin. These murdering bizdiots must be stopped. The solution, of course, is to put health insurance companies, with their criminal, murderous profit margins, out of business, and we are going to show you how, right here and right now. First, you don't want greedy, profit above everything business people in charge of your healthcare. The Commonwealth Fund identified several problems in their paper, U.S. Healthcare from a Global Perspective, 2022. Accelerating spending, worsening outcomes. That basically boiled down to two problems. Health insurance is too expensive. Patient education is largely ignored. When we address these two problems, we fix the U.S. healthcare system. Health insurance companies have two inputs, a patient and a procedure, and one output, a check to the practice for the procedure performed. That is it. If we automate the process between the input and the output, then we have eliminated everything the insurance company does. The only other thing we will address is the way to educate and incentivize the patient on how to live a healthy lifestyle. That would result in fewer claims, causing reduced rates for everyone. We at Sensha have designed and developed a solution that completely automates health insurance. We provide the electronic medical records, EMR, system to the practice, and when they document a patient encounter, we pull out the procedures performed and pay for them in real time. There are no networks, no adjudication, no denials, no medical coding, no big buildings, no people, no float, and most importantly, little to no cost once the system is built. For this service, we charge $10 per month plus the actual cost of the risk. Remember that we prove with their own documentation that your health insurance company only returns 46% of your premiums as benefits. We can return the 54% they waste to the patient in lieu of the previously stated $10 per month, plus the actual cost of the risk. There are other efficiencies we will explain, and a way to manage chronic, behavior-based disease. Also remember that treatment for chronic, behavior-based disease consumes 84%, or $3.7 trillion of the $4.4 trillion spent on healthcare each year in the U.S. The average of avoidable deaths per 100,000 in OECD countries is 225. In the US, it is 335, or about one-third higher. If we could bring the US average down to the OECD average, we would save about $1.2 trillion. That is a further reduction in costs of about a quarter. How do we do this? We offer financial incentives for people who live a healthier lifestyle as measured by our built-in health and wellness system. This system takes into account measurements taken at the primary care physician's practice, like height, weight, and blood pressure, plus things screened for in blood work. Additionally, there is a mental health screening right in the wellness package. This system looks at all these factors and then prescribes patient education based on the results. At Sensha, this is part of the system. We can tell when the patient opened the patient education and how long they spent reading it, and offer a small discount for simply doing so. A larger discount is offered for reading and following the education, as evidenced by better results in the patient's health assessment. Let's look at big round numbers. Let's say we can save the patient about 50% on their health insurance up front. Let's say that we save the people of the US another 25% by being educated about healthy living and getting to the average OECD deaths per 100,000. We know that eliminating medical coding, providing a free EMR to the practice, and putting compliance and efficacy reporting into that system will save each and every practitioner an additional $77,000, or about 2% of the total. If we total all that up, we see more than 75% savings. That means that we would have not only the best healthcare on the planet, but also the cheapest.
We have shown a way to save more than 75% from the cost of health insurance and have addressed both of the Commonwealth Fund's two conclusions about health insurance in the U.S., cost and education. We have all of this written and deployed in a prototype application. The only thing we really need to get this all started is to clean up that application and turn it into an enterprise system with logging, administration, and redundancies in hardware. We will need funding, probably about $10 million over the first year. For comparison, United Healthcare had revenue of $371.6 billion and net earnings of $22.3 billion in 2024. With about 50% upfront savings, we should service and retain 90% or more of the 330 million insured people in the U.S. That gives us a revenue of $36 billion. This figure shows that this is a viable business proposition. We have shown a way to make patients healthier by educating them on the consequences of their behavior, and a way to capitalize on that to the sum of $1.2 trillion, or about 25%. If we add that to the process automation savings of our solution, we are in the ballpark of more than 75% savings in total. We already have the best doctors and the best equipment. We just need to implement the above detailed framework to give them all the tools necessary for success. We have this system in prototype now, fully functioning. Contact us here or on our site, and we will be happy to provide a demonstration of the fully functional prototype. If you liked what you heard, please like and subscribe, click on the notification icon, subscribe to our newsletter, and follow us on all our social media and blog sites. You can read the text version of this presentation at senchahealth.substack.com. We have built a comprehensive health information system to keep the patient healthy and on the right track with the ability to incentivize healthy living. Implementing this system should be fairly simple and will completely revolutionize the way healthcare is paid for, saving countless lives. We have shown a way to use this system to make the best healthcare system in the world, also the most efficacious and the most affordable.